You hold shares of Alphabet. They're down the most since February. Look, revenue up some 15%, earnings per share jumping 31%. But it seems to be this idea of plunging $13 billion per quarter into AI that is the real worry here.
Sure. Hi, Caroline. Thanks for having me. In terms of Google, we thought it was a pretty solid quarter. We had strength in revenues out of search and YouTube. And cloud was pretty strong. Now, the $13 billion that is being spent on CapEx and the $25 billion that's been spent so far year to date, you take that and you say it's going to be $50 billion for 2024. Google still has $80 billion of net cash on their balance sheet. And so, I think the spend is warranted. That infrastructure is really needed. They needed it to do it for the cloud growth to begin with. And so, it is something that all the hyperscalers are continuing to do in 2024. And investors are just asking, what is that return on investment at some point in 2025?
Ayako, when I was on the phone with Ruth Poor, I asked her if she would give me a revenue run rate number like AWS did. You probably remember last quarter. She said, I'm not going to do that because we'll address it on the analyst call. On the analyst call, they said that year to date, they had billions of dollars of revenue from AI infrastructure and generative AI. And I'm just curious for an investor like you, why wasn't that enough if it was so good for Amazon to give a number like that a few months ago?
I think it's on the spending side. I think historically we've seen that companies that spend more on CapEx just have less room on their free cash flow to spend on money being returned to shareholders. So that's probably the reason why the stock's selling off a little bit today. But over the long term, the valuation for Google is not extreme. It still is a quality company. It still has a good business model, and I think it's pretty attractive at these levels.
What's so interesting is it feels as though Alphabet and indeed slightly Tesla are just shaking all of our concerns about the AI hype and the fact that this isn't going to be hugely revenue generating in this quarter or the next. How is your patience for AI to pay off, whether it's Alphabet or whether it's NVIDIA or some of the other names that have just gone stratospheric in the hope that AI is becoming a profitable reality?
Sure. So I think in the broader scheme of things, this sell-off in technology shares across all of tech, I think it's actually a healthy thing for markets. We're seeing, the broadening out of markets that we've been talking about for so long, and you're seeing other areas of the market sort of pick up the slack, which is great to see. I think for AI, Sundar Pichai said it in terms of taking time. It's all going to take time. And when we look back at the cloud and the growth of cloud, that also took time. I mean, AWS, Microsoft Azure, and Google Cloud were all being built, years and years ago, and we're just starting to see that benefit. And they're still growing at 25% plus rates. And so, I think that AI is probably on a similar trajectory. It's just not going to be in a straight line.
Ayako, Waymo, 50,000 paid rides a week, so Alphabet puts another $5 billion into it. Your reaction to that?
I think just as Tesla's putting money into the robo-taxi side of things, I think autonomous driving cars are, something that is a long-term growth driver for many of these companies, whether it be Google or Tesla or even NVIDIA in terms of the overall chips that will be installed in many of these cars. So I think it's still, again, another leg that maybe, again, take more time that investors don't always have the patience for. But it is another growth avenue for many of these stocks.